guys, welcome back to my channel and don't forget to like, comment, share and subscribe. US stock indexes fell on Monday, adding to a sharp sell-off last week as investors worried about the Federal Reserve's plan to keep raising interest rates in its fight against inflation even at the cost of an economic slowdown. Fed Chair Jerome Powell said on Friday that the U.S. economy would need tight monetary policy for some time before inflation is under control, quashing hopes of more modest rate hikes after recent data suggested price pressure was peaking. Investors are coming to terms with the idea that the Fed is serious about curbing inflation, wrote von Lipsey, managing director at UBS in Private Wealth Management, said in a note. We believe the economic data justifies a 50 or 75 basis point rate hike at the September meeting, with the potential for additional 25 or 50 basis point rate hikes at the November and December meetings to stay ahead of inflationary threats. Money market traders are pricing in a 64% change of a third strength 75 basis point interest rate hike in September and expect the Fed funds rate to end the year at around 3%. Heavyweight technology and growth stocks such as Apple Inc., Microsoft Corp., and Tesla Inc. were down between 1% and 5%, hit by rising U.S. Treasury yields. The U.S. two-year Treasury yield, which is particularly sensitive to interest rate expectations, briefly scaled a 15-year hike, while the closely watched yield curve, measured by the gap between 2 and 10-year yields, remained strongly inverted. An inversion is seen by many as a reliable signal of an impending recession. At 10 a.m. ET, the Dow Jones Industrial Average was down 21 points or 66% at 32. The S&P 5000 was down 20 points or 51% at 4, and the Nasdaq Composite was down 69 points or 58% at 12. The CBOE Volatility Index, Wall Street's first gauge, hit a 7-week hike of 26 points. The benchmark S&P 500 index has climbed nearly 11% since mid-June but is still in a bear market after plummeting early this year. Some investors fear a tough September due to seasonal weakness and nervousness about the economic pain from interest rate hikes. We went from the Powell path in June to the Powell path down in August, so the market that had rallied on his guidance from June had to pull that rally back out, said David Waddell, chief investment strategist at Waddell and Associates. The market is a trader's paradise right now. The economic backdrop has to prove a reason to be optimistic. Until then, the traders are just going to vacillate between optimists and pessimists based upon what the Fed says. Energy stocks climbed 2% streak and more than 3% jump in oil price as potential OPEC output cuts and conflict in Libya helped to offset a strong US dollar. Bristol Myers Squibb slid 6% after its drug candidate for preventing ischemia. Stoker missed the main goal in a mid-strength trial. Dow Inc. and Basel Industries fell 1% and 5% respectively after KBank downgraded in the chemicals company's stocks to underweight from sector weight. Declining issues outnumbered occurs for a 2-to-1 ratio and on the NYSE and for a 1 ratio on the Nasdaq. The S&P index recorded two new 5 The S&P index recorded two new 52-week highs and 20 new lows, while the Nasdaq recorded 11 new highs and 13 new lows. Okay guys, maybe that's all from me. Thanks for watching and don't forget to like, comment, share, and subscribe.